So the U.S. is going through so much political and policy turmoil right now,
Yes.
and markets turmoil.
Yes.
What do you make of what's happening here?
Well, obviously, there's a lot of volatility. I think, there's was a situation where, U.S. was importing goods from everywhere without any tariffs, and it wasn't the same when U.S. wanted to export. In the tech world, we saw many American companies that were not able to operate in China, and many Chinese companies operating freely in the States. So probably, that wasn't the most fair situation, I would say. But then trying to change that is hard, and it creates a lot of pain. So, and volatility. So I don't know how this is going to end.
If you look at the Latin America economies, they seem to be benefiting right now. How do you see that?
This is clearly a very big opportunity for Latin America in general. I would say for Mexico in particular. Mexico, has been benefiting the last few years already with nearshoring. A lot of American manufacturers moving away from Asia and from China in particular, and moving, closer to the U.S. I think Mexico has a huge opportunity, in particular Latin America in general. So definitely, if Latin America plays its cards well, I think it could benefit from this volatility. And there's going to be a bit of a permanent shift. I don't know how it's going to end, but I think the situation where everything was manufactured in China, consumed in the U.S., and China buys T-bills and in a way finances that, I think that dynamic is kind of over.
And how do you see Mexico's role in that broader shift, particularly?
I think Mexico has a population of 110, 120 million people. It could be a place where a lot of manufacturing. It already has a free trade agreement with the U.S., although it's also being discussed. I think it's going to end up well, and I think a lot of that manufacturing might end up in Mexico.
What about agriculture in Brazil, for instance, Argentina? I'm hearing that China is buying a lot more iron ore or soy, chicken, beef. Instead of buying from the U.S., they're buying from these other countries.
Yes.
Will there be a broader economic benefit beyond manufacturing Mexico to perhaps China buying more from Latin America?
Well, China has been the biggest, purchaser of agricultural products from Brazil and Argentina for a while now. The U.S. really hasn't been a factor there in that sense. So the U.S. has been more of a competitor. So maybe, I don't think that's going to be the primary impact though, but I think China will continue to buy from Latin America as it has been buying.
And what about from a global investment point of view? Your stock is up 30% year to date. You're often compared to Amazon, whose stock is down 15% this year. You're the most valuable company by market cap in all of Latin America. Do you see investors moving slightly away from the U.S., and is that benefiting you, or how do you see capital flows right now?
Well, it's hard to say. I mean, we've done well the last year. We've done well the last 5 years. We were up like 3x the last 5 years. We IPO'd in 2007 at 18, and right now we're at 2,100. So I look at the long term. I think investors will continue to invest in America when they see good opportunities, and I think the best opportunities are still being created in America. I think we offer a great opportunity for investors to buy one asset that in a way has exposure to all of Latin America and also has exposure to e-commerce and to fintech, so two very interesting spaces. Our fintech business is growing really, really fast, and our e-commerce business is growing equally fast. On a currency neutral basis, we're growing north of 50%. We're growing as fast as we've ever been growing. We're growing at startup rates, although we had $21 billion of revenues last year, and we have almost 100,000 employees. So we're already a big company, yet we're growing north of 50% year on year on a currency neutral basis. So I think that's an exciting proposition for many investors.
Do you think it's an advantage that you don't have much or any exposure to the U.S. right now?
That's how we've always been, and it has its pros and its cons. You know, Latin America has a lot of growth, a lot of opportunity again. It's very volatile, and it's not one place. Latin America is a combination of many different countries with many different politics, and right now, you know, you have in some countries like in Argentina, a very pro-markets, pro-business friendly president. Right now, that wasn't the case a couple of years ago. Brazil, perhaps, you have a more a government that is more in favor of regulation and government control. In the past, it was the opposite. So Latin America has a lot of changes, and I think we've been able to show that we can operate in the region very well with the different economic regimes, and basically because we provide a great service to the end users. And what we do is we enable people that were typically left away from being able to buy goods at cheap prices and getting it for free. What we are doing is we are democratizing commerce and fintech services, and every politician likes that, because typically the people that were excluded from accessing a loan or being able to pay something digitally or being able to buy something simply because they were living, you know, far away, now all of a sudden are being included, and that is all the politicians like that.
And people call you the Amazon of Latin America because that's easy for us to understand, but it's really the fintech and the payment side that is fastest growing. Where do you see the real opportunity there?
I think we have opportunities everywhere, but definitely fintech is growing faster for us. You know, at least half of the population has been excluded from accessing credit cards and loans and paying digitally and building their own, you know, track record of credits, and we've enabled that. We have 100 million active users on our fintech services platform, growing very rapidly, and that's because we are providing a great service. Our assets under management are growing over 100% year on year. People are using us more and more as their main financial, as their banking, you know, partner, and we enable people that historically have not had a formal job or a formal income. Maybe they are street vendors, or maybe they have a job 1 month and they don't have the next month. All of a sudden, these guys can access a loan, they can have a credit card, they can, you know, grow their business, and so that's what we're doing.
And you mentioned that Latin America is politically a volatile place and economically a volatile place. But right now, the U.S. is dominated by the debates over tariffs and the debate over inflation. Latin America has a lot of experience in both those things.
Yes.
What lessons do you think the U.S. can learn from the lessons that Latin America has learned about tariffs and about inflation?
So I would say, historically, the U.S. has been a country that has had significantly lower tariffs than any country in Latin America. For example, Mercosur, which is the trade association between Brazil, Argentina, Uruguay, and Paraguay, has a starting tariff of 35%. So, and that hasn't worked well for Latin America. Having said that, it doesn't also work well to partner with the U.S. and putting 35% tariffs to the U.S. and being able to export. So, you know, I think it's tit for tat and goes both ways. I think the lower tariffs are, the better for everyone. But tariffs need to work for both countries. Otherwise, it's not sustainable. And I think what we're seeing now is that when it doesn't work for one country for too many years, it becomes unsustainable, and you need to reshuffle. And that reshuffling is painful and volatile, and it creates winners and losers. Oftentimes, it's unfair. So, yeah.
But do you think the U.S. has been treated unfairly by the rest of the world?
No, I think U.S., it was a system that was also working for the U.S. in some aspects, or for some sectors of the U.S. Definitely the service sector was benefiting, the manufacturing sector was hurting, and I think that at some point in time, but I think it's fair to say that the U.S. was the country with the lowest tariffs everywhere, and you know, became unsustainable.
And lastly, for Argentine, what do you think of Milei and what he's doing, and especially because we're trying to do something similar with Doge?
Yes.
And do you see some similarities?
There are some similarities, there are differences, because if you look at it on the abstract, Milei is bringing down tariffs and the US is bringing them up. But Milei is bringing them down from a very, very high starting point, and the US is bringing them up from a very, very low starting point. So although it looks contradictory, it's not as contradictory as it looks. I think what Milei is doing is great for Argentina. I hope it works. It's going to be painful. Changes are painful. And I hope that people have the patience and the time to give him to see that these changes in the medium and long term really create benefits for everyone.
Great. And then very finally, entrepreneurs like yourself, when they become successful, they often try to diversify outside of Latin America, often by investing in the US.
Yes.
Do you think that investors in Latin America are more reluctant to put more money into the dollar, the US dollar, or US companies right now?
Well, the dollar has been very volatile. I think US companies are amazing. I think a lot of innovation is still coming out of the US, and the most exciting companies are still coming out of the US, whether it's on AI or in biotech, or in defense. So I think, you know, and the dollar is having some volatilities, but where will you go? You know, people maybe are going towards gold. Gold, by the way, trades in dollar-denominated terms, but yeah, maybe gold and Bitcoin are alternative assets that people are looking at, and that's maybe why their price has gone up quite a bit.